Attention this week has turned from the issues in Europe more to corporate results. In America, the Q2 reporting season began on Monday evening with Alcoa, and we've had a run of businesses reporting this week, and which will culminate this week on Friday with JP Morgan. So far, the news hasn't been particularly good. We have seen a fairly wide range of businesses in a broad range of sectors disappointing on earnings. Let's start off with Alcoa itself. This company expectations were broadly met, but the share price still retraced back down to what you can see from this chart, a 12-month chart, to very much the low end of the range. And it was really more the outlook statement from Alcoa that caused the issues here. But let's just look at a couple of other US stocks that have reported this week. The first is Cummins. Cummins is a stock that we do follow here at Killik & Co. Going back to around March time, Cummins was reporting that earnings growth from around the world should be about 10% this year. At the end of Q2, they're now saying it's going to be flat. So clearly the second quarter has seen a fairly marked downturn in their business to be reporting those sort of numbers. Cummins, as an operator, does operate in a lot of the faster growth markets of the emerging markets, and therefore it's a little bit of a warning sign that we could be seeing slowing growth from what has held up very well up until now. So the share price reaction from Cummins was quite large. It was a sort of 10% correction that we saw on that business. And again, just a further handful of businesses from the US that are warning. AMD, which operates in the semiconductor space, they support services for that particular industry, and quite operationally geared towards that market. And again, they brought forward their results to suggest that trading is running below expectations. Again, you can see the price movement. So the picture that is building here is one that where corporate earnings that have held up very well until March, April, May and June, we have seen the slowdown. It is being felt at the macro level. We've been talking about this for weeks. Certainly American GDP growth is forecast to be not the 2% that was anticipated at the end of March, but we're looking at now at possibly 1.2, 1.3% on a quarter-by-quarter basis. So, and it's now filtering through in corporate earnings. That's those sort of handful of companies demonstrating that things are beginning to impact. The fact that we're seeing 8 to 10% corrections on stock prices say that not all of these warnings are built into share prices. Share prices often referred to as cheap on PE ratio terms, and capable of absorbing some downturn to earnings at the moment. But I think these reactions indicate that there are some disappointments. Over the course of this week coming up and the week after, you're going to see a much wider range of businesses reporting, so it really sort of kicks into earnest from next week. So I think it's something that we have to watch quite closely. I want to talk about some stocks here in the UK as well, though. It hasn't always been negative news. I think the house building sector is quite interesting. This chart I'm pulling up is Persimmon, and we're also going to look in a minute at Bovis Homes, but both companies that these businesses operate in the house building sector. They're building new homes at the moment. We know that new home build in the UK is running at very low levels, housing transactions running at very low levels at the moment, and family formations, the requirement for housing, still seen as a positive reason why house builders are doing quite well at the moment. And both Persimmon and Bovis are reporting growth in terms of number of properties that are being sold in the order of about 17 to 18%. And you can see here that again, similarly, we're looking at a 12-month chart, that whereas a lot of those US stocks that are reporting at the moment running towards the low end of the range, these house builders running near towards the top end of the range at the moment. So as I say, the house building sector in the UK looking a lot more promising. Not all good news. This is a pretty severe profit warning we saw this week. This is Britvic. Britvic have had some exceptional problems in the design of some of their capsules for children's drinks, which required a recall. But moreover, the surprise was the impact that the wet weather is having on the sale of soft drinks. And I think the theme that we're seeing here is that the weather, which is now extending, as we all know, into mid-July, without a decent summer, is materially impacting on weather-related stocks. It's impacting on the high street, and it's also impacting on the sale of goods that are largely weather dependent. So Britvic issuing quite a severe profit warning, and you can see they're plummeting to new lows. We are seeing some fairly material movements in currencies around the world, and I think one chart that is interesting is the way that the UK sterling is moving to the Japanese yen. This chart shows the movement over the course of the year, but if we were to look at a 5-year perspective of how the pound has traded towards the Japanese yen, the purchasing power has broadly halved over that period of time. And what that does mean is that this week we saw a Japanese company come and bid for a UK company, quite a large one, Aegis. It's a £3 billion marketing agency business, and a wonderful premium, 50% premium to take out on Aegis stock price this week, so it's a big takeover. Kept as a very pleasant surprise, so that should keep the regulators happy. We can see there the move, but Dentsu, which is a large Japanese company, bidding that premium. And as I go back to that currency angle, given the purchasing power has doubled over the course of the 5 years for Japanese companies, could this be the start of further interest from Japanese companies in some global assets? Final chart for me today, sticking with the theme of currencies. We can't leave the Eurozone completely alone. This is the chart of the Euro. The Euro weakness has continued ferociously this week. It's hit certainly a 2-year low on that level of just sub the 122 level that we're seeing that sort of mark at the moment. We have got some impending bond auctions in Italy. These are 10-year auctions that are due on Friday, and so the Europe issue is rumbling on. So keep an eye on the euro, because at the moment asset classes around the world are keeping quite close correlation towards the euro at the moment as the sort of key piece of data for European prospects.